Today is Monday, November the 20th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, particularly interest rates. First of all, is the Fed Reserve finished hiking interest rates?
I believe, yes, they are. And the financial futures markets seem to think so as well. And currently, they are predicting that there is almost a 100% probability that the Fed at the next meeting will keep rates unchanged. That's the December 13th policy meeting. And that is the last meeting of the year. Also, there's a growing consensus among economists that the Fed is finished hiking rates in this cycle. And as you know, I, from time to time, like to be a contrarian on the markets, but this is not one of those times. I'm totally on board with the belief that the Fed is finished with their rate hiking cycle.
And Alan, why are the interest rate futures at the front end of the curve outperforming futures at the long end of the curve?
Okay, well, a better performance at the front end, I believe, is due to ideas that many economists believe that the Fed is not able to continue hiking interest rates, and that would be more supportive to the front end of the curve. Also, we are seeing weaker economic reports, including more recently the jobless claims and continuing claims that came in surprisingly higher last week. So that has affected the and the long end, supporting the long end of futures. But one thing that is putting some pressure on the long end is there is more and more concern about rising budget deficits, and that tends to be an influence, a negative influence, more on the long end than the front end. So with that in mind, I think we will probably see front end of the curve futures continuing to overperform and long end of the curve futures, especially the 30-year bonds, tending to underperform.
Lastly, Alan, how about a rundown on this week's potentially market-moving reports in the financials?
Okay, well, Tuesday, we'll have the October existing home sales guessed at 3.91 million. Also, we'll have the minutes from the November 1st FOMC policy meeting. Wednesday, October durable goods orders anticipated to be down 3.2%. And also the November consumer sentiment index predicted to be 60.5. And of course, nothing on Thursday. Friday, we'll have the November manufacturing purchasing managers index, and that is forecast at 49.9.
Thank you, Alan. Mark, looking at the grain markets, it's Thanksgiving week. Are there any seasonal tendencies to be mindful of during this shortened holiday week?
A few things jump out. In corn, there's really no tendency for higher or lower. In the past decade, 5 years have been up this week and 5 years being down. But really the lack of movement. There hasn't been 1 year in the past decade where spot corn has moved over 10 cents this week. In wheat, similar story, 5 years up, 5 years down. However, we've seen a much greater volatility here. With changes of 20 cents and even a few years over a 30 cent, rather common. In 5 of the 10 years, we saw this type of movement. In soybeans, a little bit of a supportive tilt with 6 of the 10 years higher. 2 years featured moves down of about 20 cents a bushel, while 1 year prices actually surged over 50 cents during this week.
Mark, how will this past weekend's election in Argentina impact agricultural markets, or will it not?
Well, I think you can make an argument either way. President-elect Javier Milei did run on a promise of radical financial change in the country, with many of his policies, including prioritizing trade with capitalistic countries like the U.S. and China, that being supportive to agriculture. So in the long-term, bigger picture, I think market bears would argue that this means added supplies in the global marketplace, weather permitting, of course. In the short term, however, this victory could very well be deemed supportive. One of his policy changes included the elimination of export taxes on agricultural goods. And if this were to happen, if farmers selling from this South American country would really dry up for the near term here, as he is not going to take office until December 10th. Other significant policy changes would be to eliminate the Argentine central bank and the peso while adopting a U.S. dollar as a national currency. Only time will tell how effective these radical changes will be, or if he'll even be able to implement these changes he's proposed.
Finally, Mark, please give our viewers a quick update on how the large specs are currently positioned when it comes to the grain markets.
Sure. Last week, both the index funds and money managers were net buyers in the ag space. This for the second consecutive week now, where they both have, as Alan alluded to, with credit markets now placing pretty high odds that the current Federal Reserve tightening cycle is now over. I think we have maybe finally seen a cyclical low in the index funds positioning in the ag markets. Since their peak in the spring of 2022, index funds holdings in the ag space has fallen by 38%. That at its recent low here just a few weeks ago. Last week, money managers, they were pretty much light buyers across the board in the ag space, with the exception of Kansas City wheat. They're sellers of a few thousand contracts. Their short position now has swelled to over 37,000 contracts, and that's the largest since 2019. In soybean meal, money managers were buyers of nearly 20,000 contracts. That now extended their long position to over 130,000, and that's at an 8-month high. Continue to have sizable short holdings in both Chicago wheat and in corn, a long position in beans, and a little bit of a short position still into bean oil.
Thanks, guys, and happy Thanksgiving to you and your families. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts in your risks, or would like to open a trading account, please visit www.admis.com.